A construction company owner called me last spring completely baffled. His profit and loss showed $84,000 in net profit for the first 4 months of the year. His business looked healthy on paper, and he'd just bounced a payroll check. Not because he wasn't working, he had 5 active projects. Not because clients weren't paying, he had payments coming in regularly. He bounced payroll because on that specific Friday morning, there was $11,000 in his checking account and $43,000 due in payroll. His P&L said profitable, his bank account said broke. Both were telling the truth. I'm Bev from bookkeepingcoach.net and Can-Am Bookkeeping. In 30 years of bookkeeping, the most confusing call I get from business owners isn't, I'm losing money, it's, I'm making money, but I have no catch. It feels like a contradiction. It's not. It's one of the most predictable cash flow traps in small business. And once you understand why it happens, you can stop it from happening to you. Let me show you what was going on with this client. He ran a mid-sized commercial construction company, about $2.1 million in annual revenue, 14 employees, mostly larger renovation contracts. His billing cycle was tied to project milestones. He'd invoice when a phase was complete, which meant he could go 4 to 6 weeks sometimes into a project before any cash came in. Here's where the gap opened up. His P&L showed $84,000 in profit because he uses accrual accounting. Revenue is recorded when it is earned, not when it's collected. He'd completed $340,000 worth of work in those 4 months. The work was on the books as revenue, but $97,000 of it hadn't been paid yet. It was sitting in accounts receivable, earned on the P&L, but not yet cash in the bank. At the same time, his expenses on the P&L looked lower than his actual cash outflows. He'd made a $38,000 loan payment during that period. Principal payments on a business loan don't appear on the P&L because they're balance sheet transactions, not expenses. His P&L didn't see that cash leave. His bank account did. He'd also prepaid $24,000 in materials for an upcoming project phase. That inventory hit his balance sheet as an asset, not an expense yet. So his P&L looked $24,000 better than his cash position actually was. And over the first 4 months, he'd drawn $31,000 from the business for personal needs. Owner's draws are not a P&L expense. They come out of equity, invisible on the income statement. Very visible, however, in the checking account. So let's connect the dots. The P&L showed $84,000 in profit, but his actual cash position reflected $97,000 in outstanding receivables not yet collected, $38,000 in loan principal paid out, $24,000 in prepaid materials, and $31,000 in owner's draws. That's $190,000 in cash outflows and timing gaps the P&L never showed. He was profitable, he was also broke. Both things were completely true at the same time. Understanding this is one of the most important financial concepts a business owner can learn. Your profit and loss measures performance. Your cash flow measures survival. You need both, but they're measuring very different things. Here are the 6 most common reasons profitable businesses run out of cash. Number 1, accounts receivable timing. Revenue is on the P&L when it's earned. Cash arrives when the client pays. The gap between those 2 events is where cash flow problems live. The longer your collection cycle, the bigger your cash gap. 2, loan principal payment. Principal repayment on any debt, whether it's a business loan, equipment financing, or a line of credit, doesn't appear on your P&L. It's a balance sheet transaction. But it absolutely removes cash from your account every single month. 3, inventory and prepaid expenses. When you buy inventory or prepay for future services, you're spending cash now for a P&L benefit later. Your P&L doesn't feel the expense until it's used or sold. Your bank account feels it immediately. 4, owner's draws and distributions. Any money you take out of the business as an owner comes out as equity, not expenses. It's invisible on the P&L, but again, very real in your checking account. 5 is capital expenditures. When you buy equipment, a vehicle, or any major asset, you pay cash now, but depreciate it over years on the P&L. The P&L sees a small depreciation expense each period. Your bank account saw the full purchase price on day one. 6, seasonal revenue and fixed expenses. If your revenue is seasonable, but your expenses run year-round, your profitable annual P&L can hide months where you're burning cash without enough coming in to cover it. The tool you need, and most business owners never ever look at it, is the statement of cash flows. It reconciles your net income to your actual cash movement and shows you exactly where the gap is. So if you've never looked at a profitable P&L while staring at an empty bank account, what are your options? Well, option 1 is keep running the business off the P&L and trust that if you're profitable, the cash will eventually show up. Sometimes it does, and sometimes you bounce payroll on a Friday morning with $84,000 in profit sitting on paper. Option 2, start watching your bank balance daily and adjusting spending based on what's actually in the account. This is significantly better than ignoring it, but it's reactive. You're managing the symptom, not understanding the cause. Option 3, learn to read your full financial picture, the P&L, the balance sheet, and the cash flow statement together, so you can see a cash crunch coming weeks before it arrives and take action while you still have options. The business owners who never bounce payroll aren't always the most profitable ones. They're the ones who understand profit and cash are two different things, and they manage both. If what you just heard sounds familiar, you're in the right place. At bookkeepingcoach.net and Can-Am Bookkeeping, we have courses designed specifically for small business owners who want to understand their numbers, protect their business, and stop finding out about expensive problems too late. Step-by-step training from 30 years of real-world experience. No judgment, no jargon, just practical knowledge that saves you real money. Head on over to bookkeepingcoach.net or Can-Am Bookkeeping and find the course that fits where you are right now. The link is in the description below. Subscribe for more QuickBooks and financial management tips, and I'll see you in the next video.